Welcome back, folks. We're going to be covering a few different articles. This first one is from Kitco, and it's talking about how it's silver's turn to shine as hedge funds turn their attention away from gold. Hedge funds are starting to take interest in silver as it could be the next major momentum play in the precious metals market while gold prices find a balance, kind of fizzle out. Historic speculative bullish interest in gold has pushed prices to multiple record highs in the past 3 weeks. However, silver's lagged significantly, and the gold to silver ratio still is fairly elevated, trading at 88-1. However, the latest trade data from the CFTC, or Commodity Futures Trading Commission, shows that silver still has solid momentum as gold's run starts to weaken. The CFTC disaggregated commitments of traders report showed money managers increased their speculative gross long positions in COMEX silver futures by 7,963 contracts to 53,484 for the week ending March 19th. And at the same time, short positions fell by 3,365 contracts to 16,362 contracts. The silver market has seen its net bullish positioning increase for 3 consecutive weeks. The market is now net long by 37,122 contracts, its highest level since April 2022. Although the silver market has seen a significant increase in bullish speculative positioning, the market is still well below the levels seen in early 2020 ahead of the rally towards $30 an ounce. And during the survey period, silver prices tested initial resistance at $25 an ounce. And I quote, "COT flows remain very whippy and still unengaged versus past trends with net COT length swinging from net short." And this is all, a whole bunch of wordplay, word salad for a lot of people that just buy silver. But they're basically just saying that if it breaks above $26, things will start to pick up. So while silver has been slow to wake up from its hibernation, many analysts note that it has plenty of time to catch up to gold. It's just, are you patient enough? In an interview with Kitco News last week, John LaForge, head of real assets at Wells Fargo, said that traditional silver is late to the party, but once it finds momentum, it can easily outperform gold. And I quote, "Investors need to see gold move first, and then they will get into silver," end quote, he said. And I quote, he says it may be slow to rally, but pretty soon silver will be the asset to own. And that's kind of what I always say, this phrase always uses. Silver stackers will get the last laugh. And that's just really how it is, because people will bully silver, they'll downplay it, they'll say it's nothing. But at the same time, they're investing into things that make no sense, that don't have potential, right? When you're investing into something, you're not looking at the value of it now, you're looking at where it's headed, what coming up in the future, whether it's short, medium, or long, gives that asset potential. And it has to be undervalued to want to invest into it, knowing that it will grow in value. Nothing else makes sense as much as silver, right? Some analysts have noted that silver has struggled as investor sentiment regarding the health of the global economy remain mixed. Although silver is a precious metal, roughly 50% of demand comes from industrial uses. So there are some concerns that weak industrial demand could lead to lower silver consumption. However, some analysts have noted that silver might be recession-proof as it remains as a critical metal in the green energy transition, as it is a major component in the production of solar panels. And that is so true. It is recession-proof. Whether silver or whether the economy is doing great or poorly, silver still has beneficial aspects to it, whereas gold only benefits when things are hitting the fan, right? Gold is strictly a monetary metal. So if the dollar's strengthening, gold has no place. But even if the economy's boosting and flourishing, silver benefits from that as well, since it's used industrially. That's another thing to take note of. It's like the best of both worlds. Analysts have said, and this is another great point, I'm glad they brought it up. I was about to mention this, but they mention it right here. And some analysts have noted that silver might be recession-proof as it remains a critical metal in the green energy transition as a major component in the production of solar panels. And we already have mandate amounts of solar panels that we will be producing. So even if things start to slow down, we still have an idea of how much silver is going to for sure be needed, since we have mandates in play contract to see what amount of silver is used per EV or solar panel, which, maybe they can try to cut down the amount per EV. Like, I think it's like, they're saying like 56 grams, trying to cut it down to 20 something grams. But regardless, these PV cells, photovoltaic cells using solar panels, or the EVs, or even these new EVs or BEVs requiring more silver as it's used in more and more things, digitally and technologically, is only going to boost demand, regardless of what the dollar's doing, whereas that's gold's only play. Analysts have said that the green energy sector remains an attractive target for government spending if the global economy does fall into a recession. See, optimism in silver comes as analysts see momentum in the gold market start to weaken. Although gold remains in a solid bullish uptrend, it could see some consolidation, prompting some hedge funds to reduce their exposure in the near term. Commodity analysts at TD Securities said that the gold market has now fully priced in the Federal Reserve's monetary policy easing, limiting its upside potential. Let me repeat that. Commodity analysts at TD Securities said that the gold market has now fully priced in the Federal Reserve's monetary policy easing, limiting its upside potential. And I quote, "The asymmetries in macro trader positioning in gold markets have completely dissipated," end quote. The analyst said in a note Friday. And I quote, "Non-commercial trader positioning was exactly unchanged on the week, in line with our advanced positioning analytics, suggesting that macro trader positioning became precisely consistent with rates market pricing." The disaggregated report shows that money-managed speculative gross long positions in the COMEX silver futures fell by 1,406 contracts to 172,588 total. And at the same time, short positions fell by 3,219 contracts to 29,692. The gold market's now net long by 142,896 contracts and remains at its highest level since March 2022. During the survey period, gold prices managed to hold solid support above $2,150 an ounce. Investors will have to wait until the end of the week to see a potential shift in speculative positioning following the Federal Reserve's monetary policy decision. Gold prices rose to new all-time highs above $2,222 or $2,020 an ounce after the Federal Reserve signaled that it still sees the potential for 3 rate cuts this year, even as inflation remains stubbornly elevated. Although gold rallied to a new record high, it wasn't able to hold those gains and ended last week pretty much where it started. While gold market could see some higher volatility in the next few weeks as speculative positioning ebbs and flows, LaForge said that the broad trend remains up. He added that central banks continue to provide solid support for gold prices, and at the same time, he said that renewed interest from Western investors could help the market find a second wind in this week's long breakout rally. I thought that was pretty interesting. I did want to also break off into this article from hedgeweek.com that came out today as well, titled "Silver to Shine as Gold Run Slows." So while the price of gold having hit multiple record highs in recent weeks, hedge fund managers are now beginning to turn their attention to silver as the next potential precious metal momentum play, according by Kitco. And that's what we were just mentioning. When we're looking at these prices rising or falling, you have to remember there are going to be corrections. When the price is rising rapidly, you're going to see a sharp correction, overbought territory, and then people will capitalize at the top. It corrects back down. So if you're buying at the top, like with gold the past couple of weeks, you got to remember there is going to inevitably be a correction where the price falls back down, so you could still get in. Even if it's at all-time highs, doesn't mean you have to buy there hoping to go higher. There's going to be a correction sooner than later. So silver price will probably reverse its uptrend if it breaks below a key swing low. The precious metal formed a bearish candlestick pattern on the daily chart last week. It recently touched the top of a long-term range, and it's vulnerable to falling back down to the range floor. And this came out yesterday. So silver is threatening to reverse its short-term uptrend and move lower with a range that has been yo-yoing within almost year period since April 2023. The 4-hour chart is used by analysts to analyze a short-term trend. It shows warning signs of potential trend reversal after the pair rolled over on Thursday. So I guess we should also look what silver is doing right now. So silver price, I think it's $24.80 or 46 cents right now. So we could look like the 1 week chart just to give some context. Then the 1 month chart, you can see it's gone up. Let's look at like the 6 month chart, get a better idea. So yeah, we see a lot of support around the $22 level, a lot of resistance around the $25 level. As you can see, we could even go back to like the 1 year chart. You can see a lot of choppiness, and with gold, you're also going to see some choppiness, but not as dramatic. Silver's much more volatile, and that is because silver is a much smaller market than gold is. So when money comes in or goes out, it's going to affect silver to greater percentages. Silver is a much smaller market than gold is. I don't think a lot of people know that, and that's why people will, or banks will, manipulate the price of silver. It's a lot easier to do so because it's so much smaller. For instance, we can go to gold and you'll see, a similar pattern, but gold is not as choppy. But also you can see gold taking off right here. Well, silver always follows gold. It just lags, and the lagging is what a lot of people don't have patience for. So you're going to start to see the gold to silver ratio close back down, meaning silver is going to push upwards since the ratio is still 88-1, which is extremely high. And once you understand the ratios, or how to look at the ratios, and compare and contrast that to the pricing, not only between the two metals, but which metal is going to start performing better than the other, then you get an idea of why everyone's so bullish on silver right now and not so much gold, right? It's not people just assuming or just throwing out some random speculative forecast that silver's just hopefully going to do better. It's just data shows right now that the gold to silver ratio is extremely low, and extremely high, and it is. And once it drops back down to lower levels, it's just meaning that silver will start outperforming its big brother. So you can see these levels right here. They're looking at. I'm not really too much of a chart guy, but I do like to share this. So if people are maybe thinking about buying or selling or trading or whatever, you get an idea of what the price is actually doing. I still think this can be very informative stuff, especially since they do add in a lot of context of what's happening, and this all has to do with the Federal Reserve right now. But also you can see at the end here, the conclusion is a decisive break above the range highs would indicate even more bullish momentum higher, and such a move would be expected to then reach a conservative target at the 0.618 extrapolation of the height from the range of the breakout point higher, and that is targeted at $28.52. So, we'll take it and see what happens. But a lot of it is going to have to do with stuff like this. Trump media stock news. Trump comes back to earth after surging 59% in debut session. A lot of political stuff, geopolitical stuff, economic stuff. There's just a lot happening in today's day and age, especially with some of the stuff that, just happened. The concert hall in Moscow, for example. You're just going to see a lot of things happening, and everything is pushing and pulling silver and gold and the dollar index certain ways. And at the end of the day, you just got to remember why you're stacking, because when you remember that, then you kind of ground yourself, and you're not as susceptible to, if the price is lower, starting to worry if it's not doing what you wanted in a specific time period. This isn't a get-rich-quick scheme. This is money itself, and the more you understand that, the better you'll be able to handle pressure situations. For instance, panic selling is a very real thing. Some people say panic selling. A lot of people panic sell. Actually, most stackers don't even break even, because when it does come time to sell, they're usually selling out of frustration, or they're selling because they have given up. They're not selling at the tops, because if you sell at the tops, then you would be someone who's more likely just going to be holding anyways, because if you're going to, unless you're going to capitalize on some profits, maybe put it into something else and then come back in. But most people don't do that. Most people just sell by giving up, and then they'll come back in later once the price has already risen again, ironically. So anyways, I'm going to wrap this video up here. Hope you enjoyed this video. If you thought it was educational, informational, or at least entertaining, make sure to hit the like button. I might do a live stream later today, probably, thinking about it. Or maybe just, I have another video I got to work on though, so I don't know. I'm going to start live streaming though. Right now, Miles Franklin's deals are the same as last week. They're the Krugerrand's 310 over spot, something else as well. I forget exactly what the other, a palladium bar, I think is 1 ounce palladium, it's 119 over spot. And then the last one was, I think, 10th ounce maples for $35 over melt, if I'm not mistaken. I'm pretty sure those are the 3 deals this week. They're the same as last week. If you have any questions or whatever, and you want to buy anything, slayer@milesfranklin.com. I'll be happy to help you. Yeah, I'll leave it at that. Thanks for tuning in. This is Silver Slayer. I'll see you guys later today. Peace.